Good afternoon, Carbon citizens and professionals. It's a great pleasure to welcome you again here for our Carbon Conversations for the start of a special series that we are looking and participating in Australia's carbon markets. Really pleased to want to pass on my thanks to the CMI members, national and state governments, and the Clean Energy Regulator, who are all assisting us with this series over coming weeks. I first want to welcome and pay respects to traditional owners from the country in which you are all meeting us here. Pay respects to elders past, present, and emerging. And it's also a special recognition of our Maori friends with Nigel Brunel here joining us from New Zealand as well. So look, without further ado, I'm going to be handing over the reins for this conversation to Gloria Carrascos, our Director of Climate Change, who's been leading the development of this series. Gloria.
Well, hi everyone, and welcome to our first seminar in this education series, where we take an in-depth look at carbon markets and the critical role they can play to support you and your organisation, firstly achieve your emission reduction goals, but also more broadly your overall carbon and sustainability strategy. As John mentioned, my name is Gloria Carrascos, and on behalf of the CMI, we're very pleased to be able to deliver this virtual seminar series to you, and excited about the opportunity to connect with an even wider audience across the country and across borders. Now, normally we'd be bringing this to you on the road, travelling to most capital cities around Australia and connecting you with all sides of the market, from project developers to expert market advisors, brokers, traders, as well as the team from the Clean Energy Regulator. But in this new world we find ourselves in, what better way to interact than via the virtual world? And we do want this to be interactive, so please use this as an opportunity to ask questions via the Q&A box at any time throughout the seminar, and we'll do our best to answer them. Of course, you too can all chime in if you want to add a response or build on any comments that you see. Now, as you'll see on the slides coming up in the moment, this seminar series over the coming weeks and months is really designed to cover a wide range of topics. Now, we're looking to deliver these to you to increase your knowledge of carbon markets, both here and globally, explain how markets can be used to meet your corporate goals, and give you an overview of the current market dynamics and developments. We also wanted to highlight some of the key things you need to know when it comes to procurement and trading strategies, and of course connect you to some of those key players in our industry so you can continue the conversation. Now, whether you're new to carbon markets or already deeply engaged, we hope this series will provide you with some new insights, some new information and resources, and importantly, some new contacts to assist you in your market-related activities and engagement. Now, as a precursor to this series, together with the Clean Energy Regulator, we held a webinar earlier this year where we looked at the fundamentals of carbon markets. Now, this webinar is currently available both on our CMI Marketplace, but also the CER's online market engagement and resources webpage. I'd really recommend it for anyone keen to get a better understanding of carbon markets and some of the fundamentals around Australia's policies and schemes. So it's quite a good backgrounder to this series if you haven't already seen it. Now today, despite many borders closed and travel limited, we're going to take things international. Our first seminar today is on international market developments. And we're joined by three panellists today, each of whom will share their market perspectives and insights, after which we'll move to a live Q&A to answer your questions. Now, as mentioned, please use the Q&A box as and when questions come to you, and we'll look to answer as many as possible following all presentations. I'd now like to invite our first panellist and also my wonderful colleague, Brad Curran, the General Manager here at CMI, to give us an update on the international landscape and some key trends and developments in global markets. Welcome, Brad.
Thanks very much, Gloria. Good to be here. Let me just share my screen. So I might start just by, I guess, checking in and saying that 2020 has been a rough year of bushfires, of COVID, and the human rights atrocities that have spurred the Black Lives Matter movement. But I did want to take a moment to reconnect as to why we're here and having this conversation about climate change and carbon markets. The escalating climate crisis is, of course, the underlying concern here, but it's really the Paris Agreement that's driving some of the economic change. We are all connected to this global agreement reached in 2015 because Australia is a signatory to the Paris Agreement and trades with other nations that are also signatories to the agreement. And we're also feeling the effects of climate change, and it behooves every one of us across local and business communities to find a way to manage climate risks to ourselves, to our descendants, but also to find the economic opportunities that help us drive up the ambition required to meet the challenges ahead and equip ourselves with better armour than we currently have. What I wanted to clearly underline in giving you my thoughts now is the point that in the midst of these other crises, the commitments by government, civil society and business to climate action and decarbonisation has not fallen away as it has done previously during other financial and civil crises. There may be a brief pause on immediate investment and action, constrained primarily by COVID restrictions, but the longer term goal is still in place. The global economy is moving under the guidance of the Paris Agreement, and these increasing carbon restraints and constraints will have material impacts on the long-term outlook of our economy. Before I hand over to our other presenters to get into the detail of how the market is operating, I wanted to note a few trends that we're seeing in the global marketplace right now. So, there's been some things that have been put on hiatus. We've seen that in the lead up to, that COP26, that global meeting of nations under the Paris Agreement and the United Nations Framework Convention on Climate Change, has been postponed from the end of this year to November 2021. What this means is that those formal negotiations, particularly around the finalisation of Article 6 rules, those global market mechanisms, have then been officially delayed until that point. The intersessional meetings, or those interim meetings of governments and negotiators that had been postponed until October this year, have again been postponed due to those restrictions, particularly on meeting in person in Germany. So despite those postponements, there are still softer negotiations happening. Countries are still able to talk to each other, meet virtually, and try to build consensus around particular issues, namely corresponding adjustments, double counting, the transition of some units from the Kyoto mechanism into the Sustainable Development Mechanism, or the Article 6 market mechanisms. But in the lead up to COP26, one of the things to note is that countries have been expected to update their nationally determined contributions, or their national targets. Currently, 7 countries have submitted their updated targets, 2 countries have proposed new targets, and 7 countries have said that they will not update or will submit their current or an old target. And 173 countries have not yet updated this or provided any understanding of what they'll do. Australia's position going into this process is that it will not increase the ambition of its current 2030 target, which is to reduce greenhouse gas emissions by 26 to 28% below 2005 levels by 2030. However, the government has signalled the development of a long-term strategy, and I note the word strategy does not necessarily mean target here. And we see that the outcomes of the King Expert Panel review into the Emissions Reduction Fund, recently released with the Technology Investment Roadmap, as being building blocks into this strategy. But despite this lag, what we see is, outside of those formal negotiations, is that subnational civil society, investors and the private sector are moving and moving fairly rapidly. I won't go too much into these numbers, as I'm sure my colleagues from CBL and OMF will go into a bit more detail around supply, demand and pricing in these markets and other emerging markets like CORSIA. But what we've seen is that these global compliance or formal carbon markets have been inexorably growing over the last few years. And despite a slight COVID deflation, these markets have remained relatively stable. Indeed, blocks like the EU Emissions Trading Scheme is looking at how it could use that scheme to create border carbon adjustments on emissions-intensive imports into the group of countries. And as time goes by, these and other international trade measures are likely to emerge more and more, which in an international trading sense are likely to place even more pressure on nations like Australia to decarbonise, to remain competitive in that market. So where are those things happening? This is a map of where those different markets have emerged, and those colour schemes there represent those that are implemented, scheduled or under consideration. And what I wanted to note particularly here is just a couple of markets. China particularly is preparing for implementation of their emissions trading scheme by the end of 2020, although there may be some COVID delays in getting the pilot started in the initial sectors. South Africa is the most recent market to begin its operation, and the unit registries have either just opened or they're just about to open, meaning a new market is imminently open to trading of carbon credits. Interestingly, this data that we've had on the previous slide and this slide are from the information gathered annually from the World Bank, and that information has just been released in the last few weeks. And the World Bank also categorises Australia as having an emissions trading mechanism, as having an implemented mechanism. And through the Emissions Reduction Fund auction processes, the government makes carbon credit purchases and therefore puts a price on carbon, currently at $16.10 as that weighted average price from the most recent 10th auction. And via the safeguard mechanism, covered entities are required to purchase and trade in emissions reductions to manage their liabilities. So what we see here is that Australia has a functioning carbon market with high integrity, transparency and accountability, which stands us in good stead to potentially carve out a competitive advantage in future internationally linked carbon markets as they evolve under Article 6. Noting, of course, that Australia's current policy mandate and settings don't allow the transfer or trade of Australian carbon units internationally. Also wanted to touch on the voluntary market drivers. So what we're seeing in voluntary markets outside of those formal compliance mechanisms is that within these markets and increasingly outside of those markets, businesses are shifting their investment from general emissions reductions to investing more and more in nature and solutions that drive climate change and climate repair. Particularly in these voluntary markets, there's been a strong uptake of nature-based solutions and offsets driven by an increase in the visible climate impacts and subsequently the need for climate repair and that environmental drawdown and remediation of landscapes. So what we've got here is information from a report released at COP25 last year, the Ecosystems Marketplace's Global State of the Voluntary Carbon Markets, their 2019 report. And this showed that year on year, significantly more investment is being voluntarily funneled into those carbon sinks than ever before. In voluntary markets, investment in nature-based climate activities are now far outstripping the nearest renewable project competitors. In 2018 alone, approximately 98.4 million tonnes of CO2 worth of carbon credits were traded in those markets, with a total market value of around $295 million US a tonne. US total, sorry. This marks 7-year highs in the trade of nature-based carbon units, and this expansion and diversification of demand that you can see in the table on the right there has seen reforestation and afforestation projects grow in emissions offset volumes by around 342% in 2018 alone, up from 2017 figures. 2019 figures are soon to be released and expected to reflect similar, if not greater, growth rates. So there's a lot of movement in the voluntary market, and the corporate climate responsibility narrative has also begun to shift beyond emissions reductions towards that climate repair narrative. As such, corporate interest in nature-based solutions through carbon markets for both compliance and voluntary purpose has grown in recent years and certainly underpins a lot of the activity taking place here in Australia. And it's also been leading to an increase in market participants. In an increasingly carbon-constrained economy aligned with the Paris Agreement, the ability to deliver carbon-neutral claims, products or services to the market depends on a secure, low-cost supply of offsets. So in addition to the rapid increase in net zero corporate claims that are aligned with the Paris Agreement, companies are becoming more and more sophisticated in how they approach markets. Many are now taking a portfolio approach to investment in a range of different offsets, units and project types, and they're starting to investigate or develop their internal project development capabilities so that they can take a more active role in this. But that really depends on an organisation's capital allocation, their balance sheet, and the risk profile or approach that they would take to these sorts of markets. More broadly, in looking at some of the voluntary market activity and demand drivers, I think outside of the public policy space, there are several drivers, global and regional frameworks that are being used by corporates to establish strategic pathways forward in a carbon-constrained world. And what we can see here is that it's really starting to become a race to net zero. Up in the top left-hand corner, you've got Telstra and City of Melbourne that have made net zero pledges by 2020. And others as we go down the line, net zero by 2050, 2040, 2039. And these are big announcements in the market that really send a strong signal that if you want to be relevant, if you want to be able to build a competitive advantage in the market, then you need to be thinking about how you either get to net zero or play a role in that for other companies. So other drivers behind some of these commitments are things like the UNFCCC's Climate Ambition Alliance. There are 15 subnational regions, 398 cities, 786 businesses and 16 investors that have also indicated they're working towards achieving those net zero emissions targets. There's voluntary corporate commitments, investments, targets, and all of this action is really increasing across the board. So initiatives here such as the Science Based Target Initiative and the TCFD are also driving corporate activity towards net zero. So all of this builds a broader picture that the world is moving. And what I wanted to close with is that really for companies here in Australia and around the world, it's in your best interest to build your own capacity now and the capacity of your organisation so that you're prepared to manage the risks and take advantage of the opportunities as they arise, and that you remain competitive as we move into a carbon-constrained world and that you don't get left behind. So I'll leave that there and hand back to Gloria and look forward to the discussion.
That's great. Thank you, Brad. Certainly a key message there that alive, markets are alive and well. Wonderful. I'd now like to introduce our friend across the ocean, New Zealand, Nigel Brunel. So Nigel's our Director of Institutional Commodities at OMF Markets, and he's joining us here today from the trading floor at OMF. So Nigel, I'd like to throw to you now for your perspectives and insights. Thank you.
Great. Hey, yeah, look, thanks very much, and it's great to be here talking to you all. So I assume you can probably see me and hear me okay. So I thought it'd be interesting just to follow on from what Brad has talked about in regards to probably starting off with what's happening with Article 6. So even though, and I appreciate that some of the audience will probably have quite a good deep understanding of Article 6. So I do apologise if I'm covering some ground that some of you are very familiar with, but I'm also cognizant when we talk to customers that there are a lot that aren't really completely up to date with things. Just to probably initially talk about, so OMF Markets, even though I'm calling you from our bubble over here in NZ, OMF Markets has been operating in Australia for about 4 or 5 years, and I'll just bring up a slide of our platform. So some of you may be familiar with the fact that OMF makes markets in ACCUs, and there's our platform there, which you can visit under accus.com.au, and you'll probably notice in the top left corner there, our name is changing to Jarden. For those avid readers of the AFR, you probably have heard on the street that there's been quite a big move by our company, Jarden, who have bought OMF and setting up in Australia on the merchant banking side. So you'll see a lot more with that, and in the coming weeks and months, we'll be switching over to Jarden. So we can probably get rid of that slide for now and sort of come back to me, and I've probably only got one more slide a bit later on. So just to sort of cover Article 6, because a lot of people went to Madrid with high hopes and probably walked away fairly disappointed with the lack of progress really around Article 6, which is really crucial to the development of international markets, and also very crucial to voluntary markets as well in regards to certain things. So Article 6, which is a relatively easy thing to sort of understand, has sort of 3 main paragraphs and 2 which relate to carbon markets. Article 6.2, which is really around accounting for transfers. Now, whether that's a bilateral or done under a UNFCCC mechanism, the accounting guidance is underway, and it really is coming down to sort of two main issues, and that is being integrity and accounting. Now, there is a bit of complexity around this, as different countries have different NDCs and types of NDCs, but there's very much agreement at a high level. And many countries, which I'll show you in a slide to come, are already talking with each other. So I'm not going to spend too much on the accounting, because accounting is a pretty dry subject most of the time. But if you want to move on to 6.4, which is really about the mechanisms, and this is really where I suppose there's already architecture in place in regards under the CDM. So there's sort of moves afoot where private actors can effectively develop projects, and we're seeing a few of these anyway. We do need a supervisory body and rules for engagement, and how that's going to be determined, and we're quite a way away from that being done. And of course, the big debate is, how does it look for Paris? So there's lots of decisions that are yet to be made about that. But having said that, there is a lot of projects underway, and I'll just bring up that slide right now in talking about the pilots that are operating, and there's many of them, and some of you might be aware of some of these, such as the EU-Swiss ETS link, which is due to start. I think it's been delayed to sort of third quarter of this year, but as you can see there are a number of pilots underway and many more to follow. So I think if you look around, you can certainly see right across the globe there are many, and whilst New Zealand itself and Australia hasn't developed any of these, I think certainly from a New Zealand perspective, we do expect some of these to be happening in the near future. The crucial thing to understand with Article 6 as it relates to compliance markets is there's probably around 90 countries that will need access to international markets. They can't do this domestically. And I think the other thing that's really important to understand, the difference between Kyoto and the Paris Agreement, one, obviously that Kyoto was for developed countries and Paris basically includes everyone, but the Paris Agreement is not a unit-based agreement, whereas in Kyoto, people will turn up to the true up, with the AAUs and work out who's long or short and that be it. Whereas under Paris, it's really about proving how you've been able to meet your obligations, and there's a number of ways of doing that. But it won't be a unit-based mechanism like Kyoto has. So what's been happening sort of post Madrid? Because obviously, for those that were there, Sunday never seemed to end in that, and at the end of it, we didn't get an agreement. And then, of course, everyone sort of came back home, and we all know what happened in sort of first quarter and still ongoing around the globe. So there was a group that have met called the San Jose Principles, and this is a group of 32 countries that have met post Madrid. And it's really about sort of setting a benchmark for carbon markets. So they've agreed on a set of principles for high ambition and integrity. And you can Google this, San Jose Principles. Interesting enough, Australia's not part of that group. There are some high level things that they're talking about, and a couple of these I'll just read to you. Ensuring environmental integrity and enable the highest possible mitigation. Prohibiting the use of pre-2020 units, Kyoto units and allowances. And ensuring that double counting is avoided. Now, obviously, when I was speaking to our officials just in the last few days, clearly no one's able to meet in person, and the reality is that for a lot of these agreements to actually push forward and for them to be successful, these things are better done in person. So if you think that global climate policy is a little bit like boxing a glacier, when it's in person, you can imagine what it's like being done under Zoom and Microsoft Team meetings and things like that. But nevertheless, people are still meeting. There are still, as you see with that previous slide, a lot of pilots underway. There's a lot of desire for these markets to move forward, and I think whilst nations are starting to move forward in some of these things, I think what you'll find is that they will get the accounting and the mechanisms, well, certainly the accounting catching up. So, you know, fingers crossed that that sort of happens in the months ahead. I suppose just sort of touching briefly onto voluntary markets. Here's what's really interesting, and for those that probably were aware, the voluntary market is almost becoming the new compliance market, and in regards to its size, and also, you know, people have to be aware that Paris is also a voluntary agreement, but there's clearly moves afoot by lots of private organisations to do something about the carbon footprint, and a lot of it's not necessarily a lot of it is being driven internally, but there's also external pressures, you know, coming, you know, from the whole ESG movement now, where we're seeing large funds, some of them completely divesting of fossil fuel investments, some taking a more pragmatic or transition approach and looking to keep those that are being seen to be doing something around their emissions and divesting for those that don't. But there's also pressure coming internally from boards, because now a board can't really sit there and say that with the scientific evidence that it doesn't have to do anything about its emissions. And as some of you have been aware, you know, there's been over 1,000 climate change court cases globally, you know, from the beginning of last year, where people are effectively activists walking into courts and suing companies, states, even countries. And we've seen that here in New Zealand, and you've actually seen it in Australia as well. Article 6 is going to be really crucial to voluntary markets. We saw Gold Standard come out and seeking a firm line on Paris era offsetting. And I know here in New Zealand, the government is doing a lot of work around how the voluntary market has to operate going forward, because there's a few things certainly here that you need to be aware of and actually follow in order to be claiming that you're voluntary offsetting. And obviously one of those is to be accounting accurately, but also developing a reduction process and how you're going to reduce emissions and offset units that have high integrity. Already that's happening now. So, you know, I believe the days of going out there and buying 30-cent CERs, no matter how good you might think they are, just aren't going to cut it going forward. And clearly we do need a resolution to Article 6, because it's very important that you don't have two types of people laying claim to the same credit. And this is going to be very important going forward from next year. So I might just leave it there for now and just maybe pass that back to you guys if there's any questions and anything else you'd like to know.
Great, thanks, Nigel. Thanks very much for that. You know, we did think green was the new black, but clearly voluntary is the new compliance. So that's a good little takeaway there. So our next presenter today is Ben Stewart. Now, Ben's the Chief Commercial Officer at CBL Markets. I'm just going to bring Bren onto the line now here to share his slides and insights with us. So bear with me while I just get the slides up, and we'll shortly throw to Ben, who's joining us today from Sydney.
Very much for the opportunity to present at the CMI event. My name is Ben Stewart. I'm the Chief Commercial Officer here at CBL Markets, which is a part of a broader group called Exchange. Just if those of you who don't know who we are, I think I'll run through a couple of slides just to introduce what we do and where we fit into the global marketplace. So if you just go to the next slide. Thanks, Gloria. So CBL Markets, we operate a spot trading platform in the environmental commodities space, where we look at multiple markets around the globe, primarily focused on the Australian and US marketplaces. And the key to our business is we are looking at all markets that involve a registry element where units are being managed and held and ownership is governed. And ultimately, the point of our platform is to try and bring some price transparency, some automation, and create a level playing field for participants in markets that are growing very rapidly at the moment, but have previously been very segmented and not overly well serviced by exchange technologies. If you go to the next slide, Gloria, just go through quickly some of our products that we do trade. So here you see this is some of the products that we operate in renewable energy certificates across the US, Australia, the global offset market, primarily in the traditional voluntary carbon markets being Verra, Gold Standard and others. And we also operate in the, have launched recently in the Aviation Carbon Exchange, which is an exchange platform we're working with in conjunction with IATA to look at servicing the aviation industry. And I'll touch a bit more on that later, but I think there's some relevance of some of the frameworks that aviation industry has put in place that I think has a broader application to carbon markets more widely than just aviation. And then we also operate in one of the more unique products we are bringing to market is a differentiated gas product, which allows companies to trade and purchase certificates, much like a renewable energy certificate, but for gas, that allows you to purchase attributes based around the production of that gas. So, for instance, you can buy a non-frack certificate if you choose to not support a fracked gas market, and then you can make claims that you're supporting non-fracked production sources. And there's a lot of other programs that are the same, especially in the US, around carbon intensity of gas production that is driving a lot of that product development in that space, which I think ultimately will have application globally as those markets progress. Just going into some of the trends now that we have been seeing in the market, or if you just move on to the next one. And the next one, thanks, into the actual detail. So yeah, so some of the things we've seen, big market trends and shifts, I think that Nigel and Brad both alluded to, that traditionally the global voluntary carbon market has been seen a bit more as a discretionary spend and something that the companies would, in times of hardship, would potentially put on the chopping block and no longer look to pursue as an entity. Now that movement has definitely changed, and we're seeing that claims that are made and positions in this space are almost becoming a social license to operate, and that ESG related matters are becoming a big driver towards companies' ability to be financed and maintain their position in the current market and stay relevant in the current environment. Interestingly, we've seen a lot of changes in supply and demand in the voluntary market. Traditionally that market has been very heavily oversupplied. But in the recent times, in the last sort of 12 to 18 months, we've seen a great tightening of that supply, and that kind of resonates a little bit further with what we see as the rationalisation of the carbon market, and this is what we have associated with where we're seeing things with what Corsair and ICAO within that framework have come out with as relevant set projects that are going to be eligible into those phases. And that is now sort of setting a guideline for companies globally to align around in order to create some sort of rationalisation of what is traditionally a very bespoke marketplace. And I think that has really significant repercussions for how carbon is priced globally going forward, utilising offsets as the basis rather than allowance markets or any other mechanism that are out there which are very much regulated and can change with the stroke of a pen. Pricing is definitely on the move, as I think we've all seen, and Brad had some great slides regarding. There's been quite a significant uptick in price in a lot of these products, where the bottom of those sort of pricings are sort of now moving up towards sort of $1 US, and that's where we're sort of seeing a pretty significant movement where we spoke about previously being able to buy 30-cent offsets. That's sort of no longer a possibility, which is quite interesting. The emergence of these differentiated products, I think, is something that's really interesting. It has a great alignment with the international voluntary market and the international carbon markets. And this relates to the gas product I was speaking about previously, where there's a big alignment around production factors, like the greenhouse gas intensity of certain commodities at their source and how they're produced. And there's a lot of work being done and a lot of movement in this space, oil and gas sector in the US. We're seeing a significant amount of momentum there. And then, finally, I think, the ability to have more data and see more pricing and analysis of these markets is helping bring a lot of the traditional trading firms into the marketplace. they relied on stable, significant data sources to be able to provide them with information that is relevant so that these products can get through risk and compliance departments is now becoming available, and therefore we're seeing a lot more of the traditional actors and traditional larger trading firms become more active in this space. Go to the next slide, please. Yeah, great, thank you. So this is just an indication of some of the volume growth that we've seen in our own platform over sort of the previous years. And as you can see there in 2020, significant uplift in volumes, where the first half has actually outstripped the previous year quite significantly. So that is, I think, is a trend that everyone has sort of been realising. I think it was alluded to in a lot of Brad's slides as well, that the perception of offset markets has changed, and they're now very much a relevant part of a company's ambitions and processes towards some of the targets that they're looking to achieve. So that's been significant growth. And actually the majority of that was in the first quarter of this year that we saw significant growth. Obviously, there was a slight slowdown in the markets for the COVID pandemic becoming a global issue. And since then, what has really surprised me as someone who's been in this market for a long time, and is that the resilience of this market has shown through such a huge upheaval in global economics, whereas previously this would have been very much a casualty of these downturns. This market has continued to perform and grow and operate, and we're actually seeing the volumes that we saw in the first quarter of this year starting to flow back again as we get into Q3 of the calendar year. So move on to the next. To the Corsair. So just talking about Corsair now, the aviation industry, as we mentioned, this was probably one of the key drivers to a lot of that uplift in the first quarter of this year. Obviously, that has sort of slowed down a little bit with the natural pressures coming down on the aviation industry, and therefore, probably the airlines themselves specifically looking to get in and be very active in the markets is sort of in a bit of a holding phase at the moment. But ultimately, we are seeing that a lot of the people that would normally supply or be natural counterparties to the airlines picking up a lot of that slack and looking to get in and start trading in that space. Sort of seeing since we've sort of started pushing out the aviation and carbon exchange, the fact that we're actually at 50 and now the 30's largest airlines have actually now signed up and are now actively engaged with this platform to understand and educate themselves on how to utilise this and how to access the carbon markets, which in the current circumstances is a really significant amount of momentum that is still being put behind this program, which is very exciting. And if we just go to the next slide there, where we have the impact analysis. Obviously, I think there's a lot of different opinions floating around about this exact issue at the moment, and there's a lot of unknowns that are going into this. But ultimately, like everyone else, there's different opinions. This is just one perspective on how we see the impact of COVID-19 and what the relationship it is to bouncing back towards making offsetting actually applicable within the Corsair market. And as you can see there, on a sort of a medium case, or probably a best case scenario, I would suggest we think that volumes will sort of exceed the 19 baseline, should that be the process that is put in place by Corsair to just look at 2019 baselines, that we should start to see activity start to kick in sort of late 21, early 22. But on a worst case scenario, we see that pushing more out to sort of the start of 2023. And that's it. Thank you. Apologies all for the disruption in regards to the technical difficulties. Hopefully that wasn't too painful for everyone.
No, thanks a lot, Ben. We're able to hear you loud and clear, so thanks for persevering, and appreciate your insights there. A significant uptick in offset activities, something really interesting, and particularly the resilience of the market that you've mentioned carries on despite some of the implications of COVID and the economic situation. And in fact, there's been a lot of the questions coming through related to that as well in terms of what's happening. So I think you've done a great job of answering some of those questions in advance. So I'd now like to move to the Q&A. I can see a lot of you have been asking questions and in fact using the upvote and tick, which has been great, allowing me to prioritise some of those questions. I might start with the most popular one at the moment, and off the back of the announcement that Australia and New Zealand are hosting the Women's World Cup in 2023, there's a question here for you, Nigel. Are Australia and New Zealand looking to initiate Article 6 pilots with each other or with any other countries?
Yeah. Hey, look. Firstly, congratulations to the getting the World Cup for both of us. I think that's a fantastic effort for women's football. Fantastic to see. Okay, so New Zealand is definitely having conversations with other countries in regards to what it can do, though none of these are being made public at this stage, right? In relation to Australia, I can't talk for what Australia might be doing in regards to having its own conversations about potentially doing deals with other countries. I know Australia has talked about the fact that the credits won't be available for export, but I think the big issue that Australia will face is if it sticks to its plan to take forward its Kyoto surplus into Paris. I had a chat with our officials around what they would think about the linking with Australia, because we've always said that Australia could be, and potentially is, a fantastic carbon market, but it goes to the heart of integrity. You'll find that some countries might struggle linking with Australia if it takes through that Kyoto surplus, because it goes to the heart of the integrity of, therefore, the units that might be coming out of Australia. So I don't know what Australia is doing in its own right in regards to looking to do Article 6 pilots. Your own DFAT would be best to answer that, but I know that some countries would, certainly New Zealand will, and others will struggle to do deals if in fact you do take forward that Kyoto surplus. And we still want to do the World Cup together, so despite that point, but yeah, it will struggle if it holds on to that view.
Okay, great. Thanks, Nigel. Ben, are you still with us at the moment? Just checking in.
Yes.
Yes, thank you, Claire. I might just have a question for you here as well. In terms of, I know you touched on kind of international markets and COVID implications, but how do you think that's going to really impact the voluntary market activity, and what's the global outlook potentially for prices and key considerations for corporates looking to engage in the short to medium term, I guess, as we come out of this global pandemic?
Yeah, as I mentioned, I think that the voluntary market has shown pretty amazing resilience through this period. Normally a downturn like this would have spelled a very significant pushback on that market that may have put it back many, many years. But as I mentioned, the perception around this being something that is a discretionary spend seems to has left the vocabulary of corporates now, and all of those companies looking to make claims towards neutrality or net zero emissions, as Brad had in his step down slide, are all still very relevant and are all still very much pursuing those outcomes. We've seen actually significant interest in the last sort of 3 to 4 weeks. And I think the initial shock to the system and the upheaval that COVID caused to many organisations are starting to be ironed out a little bit now with working from home and people being able to operate a little bit more smoothly. And as such, we've seen the interest flow back into the carbon markets a little bit similar to what it was in the first quarter of this year. So we think that the outlook looks very, very positive and very strong for the global voluntary market. And I think we have the data would say that is right, and that the actual pricing has come up significantly. Admittedly from a low base in a lot of cases, but it's rising all the same. So we see that being a continuing trend, and that given it's still probably perceived as a relatively underpriced commodity class at the moment, given where internal cost of carbon is probably being placed by a lot of corporates. Being able to source offsets that are very very high in integrity and have a lot of added attributes and benefits to them for circa $1 is still very attractive for a lot of corporates. corporates, those that are moving early and looking to shore up some of that supply, because it will get squeezed very quickly. It won't take a lot more demand to drive that up much higher in the future.
Okay, and do you have a view which jurisdictions or industries are kind of the most active, or those kind of changing their market behaviours that you see might be engaging most in the market in the future?
Yeah, I mean, we obviously the airlines was a big player, and you know, we do see them coming back, especially a lot of the ones that made voluntary commitments outside of just their Corsair commitments. We see that remaining to be strong. I think the oil and gas sector is definitely really looking to make some significant moves. You know, and we bundle in that, obviously the LNG markets are very active. There's a lot of different tenders and RFPs going out now for supplying, you know, some sort of differentiated LNG product that has an ESG or carbon neutrality element to it. So that's being a big driver. But you know, generally across the entire you know, sort of community and society, economic society, we're seeing a lot of actual activity coming from varied players, and you know, it's actually, yeah, obviously becoming something that's, as I said, becoming embedded in the fabric of these companies. So we're sort of seeing very much a broad movement, but you know, if I had to pin on a couple of key movers that, you know, probably had the most ground to move, to be fair, you know, oil and gas sector and sort of the aviation sector is probably the lower hanging, and also shipping. I'll add shipping to that. There's quite a lot of information and interest in the shipping industry that's sort of gaining some momentum.
Great, thanks, Ben. So I can see a few questions streaming through here. I'll try and kind of change tack and move over to NZ now and get Nigel to answer one about, in light of the COP being delayed, the future of CERs and the CDM. So a question here on the legal basis of the issuance of CERs post-2020 and whether there'll be an out-of-session ruling on this, and also whether a vintage rule might be applied to CERs. If you've got any comments on that, Nigel. I'll just unmute you first. Hang on a sec.
Done. I'm unmuted. Yes, makes it much easier to be heard, doesn't it, when you do that? Yeah, look, there's a lot of contention around this because there are some countries, certainly in Madrid, that were very keen to carry forward CERs, and the amount of sort of CERs out there pre-2020 potentially could flood the market. There's no doubt about that. And you know, when you look at sort of what the premise is around Paris, which is around emission reductions from 2021 onwards, it doesn't really, you know, from that whole perspective, it can't really be done in carrying these forward. Having said that, there are some CER projects that still have emission reductions coming into the 2021 and beyond period, right? So, and I think there will be a little bit of a transition to allow some of these. Now, I think we are still waiting for a ruling or a view from an out of session comment on this, and I think we will get it. But clearly, I think pre-2020s have got no chance. But I think projects that have that are seen to have integrity, additionality, and clear emission reductions in the next decade could potentially be allowed through for the first couple of years.
Okay, interesting. Thank you. Cool. Just looking through the upvotes here and what's getting the most activity, and I might just throw this onto the floor as well. Just one about the size of a voluntary offset demand, particularly in Australia. So outside of the Emissions Reduction Fund or Climate Solutions Fund, what do you think that looks like? Just feel free to chime in, any three of you.
I'll let Ben go that one.
Thanks, Nige. Look, yeah, that's a pretty hard target to put a pin in terms of the size of that, but I can say it's growing significantly and year on year. We have seen significant growth, you know, and I think it could be anywhere from 10 to 25 million tonnes of demand. You know, I know that's a wide range, but you know, it definitely has seen a significant amount of growth. But yeah, I think that would be probably a pretty fair estimate, I would imagine.
And probably just to add to that, I think what you're seeing is a lot of private companies are really getting their head around what their emissions are and what they can do to reduce without necessarily at this point in time moving into offsetting. they're more saying, look, for example, you know, our goal is to be, say, net zero by 2025 or 2030, and then starting to look to move towards that time of being a time that they actually start purchasing and offsetting. There are a lot of companies that are doing it already, albeit some a lot smaller as opposed to some of the bigger ones, but that's certainly what we're seeing. Some of the discussions we're having with customers is that they're actually in the process of, you know, accurately determining what their emissions are, you know, working out ways that they can actively reduce, because bearing in mind offsets are only ever a transition, and then I think in the years ahead they'll say, right, this is where we're going to move into the market. Now, some of those discussions, interesting enough, they're saying, well, how can we hedge some of that risk? Because everyone's of the view that carbon prices are going to rise in the years ahead and are rising. We've seen our carbon price in New Zealand go from 25 Kiwi to $32. We've seen European carbon, you know, have strong rallies, South Korean as well. So I think there is a understanding amongst corporates that whilst they may not necessarily need to be buying right at this minute, they are sort of looking at ways that they can potentially hedge that risk.
I'd agree with that as well. I think what we're seeing, and a lot of this is anecdotal from just being out in the market, well, as much as you can at the moment, but hearing from a lot of companies that they're going through that process and they're starting to engage in longer term offtake agreements for delivery of units in, you know, in post between 2020 and 2025. There's sort of that 3 to 5 year time frame, some of them, and it's trying to shore up that supply chain. So as Nigel said, you can kind of manage that future price and hedge against that. But I think there's also a competitive element here. A lot of this activity is kind of happening behind closed doors in Australia, because I think there's a competitive advantage to be had if you can say, you know, we're now going carbon neutral. You're able to make that announcement, and so companies are sort of shoring up their position and building that supply so that at some point in the future they can hit the button and make that position known. But I think that it's hard to tell, because we don't have a lot of price discovery here in Australia. The voluntary market isn't that transparent at the moment, so it's hard to tell what that size of the market would be. Certainly bigger, I think, than in the spot market or in that sort of shorter term purchasing time frame. It would be bigger than, say, the safeguard mechanism compliance market in Australia. But I would say that there's definitely a lot more action happening, that you kind of just need to almost hear about it from the people that are doing it and be trying to talk to businesses and understanding some of that. So it's definitely happening, it's definitely growing, but it's happening quietly.
Great, thanks guys. Thank you. I might just move on to a question now around supply chains and how they're being impacted by international commitments. So obviously corporations making net zero commitments. What role do you see the supply chains having or are playing in enabling suppliers to demonstrate that their products are low emissions? Do you see that kind of activity picking up, or that kind of conversation happening with corporates?
Yeah, maybe just to quickly add, we certainly have had discussions with some very large corporates here in New Zealand and also in Australia that are actually being asked those questions by certain parts by their end customers about their supply chain. So it all comes into that whole picture around the fact that, you know, a lot of companies have got to, you know, they're getting pressure from customers, getting pressure from boards to actually demonstrate where their emissions are and what they're doing about them. And certainly as some countries start to step up towards Paris and also have their own obligations from the importing of emissions, is, you know, what's being done about it. We're definitely seeing those conversations being had.
Great. Brad, did you want to chime in on that?
I did, yeah. I'm just hurriedly writing some notes. So I think there's a few ways of thinking about this, about the supply chain. There's sort of the emissions within a corporate supply chain, and thinking particularly around how you manage the indirect emissions, that Scope 3 emissions. And what we're seeing is a lot of companies there, large companies that have made a net zero by 2050 target, or they've got a relatively sophisticated climate strategy. And the secondary piece of that is, how do we account for and manage our indirect emissions? And that's really difficult. It's really difficult to account for those emissions, to understand across your whole supply chain as secondary and tertiary suppliers what those emissions are, and the ability to build the capacity within your supply chain to measure, report, verify those emissions and fully account for that is, I think that problem hasn't been solved yet. But certainly CMI and through some of our activities with our corporate members, we're looking at how we could play a role in making that easier for companies to do. So that's one part. I think there's a second part around, particularly if you're looking at carbon markets, where you're trying to understand the supply chain of carbon within the products that you're trading, probably into into another market, but also the supply chain and trying to manage the supply chain of a carbon project. So in terms of the supply chain of particularly emissions intensive commodities, I suppose, that Australia might be sending overseas, there's a question about, are you trading with a country that at some point will have an emissions trading scheme or a compliance liability that means that companies within those nations need to reduce their emissions? So are you able to send a carbon neutral commodity or provide a carbon neutral input into that company's supply chain? We in Australia sit within the supply chain of many companies in the Asia Pacific region that are putting into place these trading schemes. And so, is there an ability in the future for Australia to staple Australian carbon credit units to iron ore or to, other commodities, grain, etc., that we send into other countries, staple that, and therefore essentially almost have a carbon neutral input into someone else's supply chain or country? So that's a question that there's a lot of regulatory tools and bilateral arrangements that would have to happen between those countries. But that's certainly something that other countries and companies within Australia are considering and looking at how that might work. The other part of that is also the supply chain of carbon projects, and this goes to the issues around integrity, transparency, and accountability. Is that if you want to be able to develop a carbon unit that has the right qualities for it to be traded under Article 6 and in future markets, you need to ensure that the supply chain of inputs into those processes are really high quality, and a lot of those are more have to do with the enabling factors rather than physical technology or pieces like that. It's around legal risk, it's around land tenure, the license to operate in environments, the professional and governance structures you have around these things. We've got a lot of that in a really strong way here in Australia, but particularly in the region, as we move through, I think there's a lot of things that you need to try and understand and build, I guess, that institutional strengthening in the supply chain of carbon projects. So I think there's a few things in the carbon market conversation around that. There's the Scope 3, there's the providing carbon neutral inputs through the use of units, but then also the supply chain of the units themselves. So some long-winded thoughts from me on that.
Thanks, Brad. Lots to consider there, and yeah, certainly a lot of interplay and considerations when it comes to the market and different companies interacting. So thank you for that. And we have just brought us to time now. So I really just want to say a big thanks to all our panelists today. Thank you to Nigel and Ben for joining us, Brad, of course, from our team, all the people behind the scenes that have made today happen, of course. And we look forward to hopefully seeing you next week. We've got our series popped up on the screen there, so we're going to come a bit closer to home and bring the conversation here to Australia to look at the domestic market and some of the dynamics around what's happening here. So hopefully you can attend that one. You'll be given a reminder to join for the next week's event, and we hope that you can join us for the entire series. So thanks again to everyone. Enjoy the rest of your day, and thank you all for joining us.